Thank you so much, and thank you, the panel. Hopefully we're gonna have a good discussion. What we're gonna do today, we're gonna take a little bit different approach, and we're gonna speak about financial inclusion from 360 degrees, and really what it is, why it's important, why are we seeing challenges in financial inclusion, and what are the different factors that will be driving it. Financial inclusion is very critical, considering it is the cornerstone of the development of the government, as well as it is a driver for economic establishment. So I'm going to start with Anuraag today. Could you talk about what is financial inclusion and why is it important?
So thank you, Irina, for the introduction. Before I go on to explain what is financial inclusion, I'll take you a little bit in the history and the origin of it. Now, if there's anything which has finance and accounting attached to it, the name of India has to come somewhere. And being of an Indian origin, I'm proud to say that financial inclusion was for the first time ever introduced in a village called Mangalam in a state called Tamil Nadu in the south of India. And this was done by a gentleman called Mr. K.C. Chakraborty, who was the chairman of Bank of India at that point of time. And with that initiative, what it brought was that the entire village, the rural household, everyone in that village had access to banking facility. So the fact that it started off from a village clearly indicates that the target segment for financial inclusion was the weaker section of the society or the lower income group who needed access to affordable financial products and services in the most fair and transparent manner to be provided by the mainstream institution players. And that's what financial inclusion primarily does. Now, so financial inclusion primarily helps people put on a path out of poverty, creates productive, empowered citizens, and fosters business opportunities and fuels economic growth. So in a nutshell, this is what is financial inclusion about.
This is great points, and then what you've raised really is why financial inclusion is important for the governments, right? So now let's talk about what is the role of the banking sector? What is the role of financial securities and financial services sector overall in to promote inclusion?
So specifically when we talk about banking, the bigger question with the senior executives in global banks is how can we benefit the society, and at the same time, how can we improve the bottom line, right? So for sure, by providing more affordable and relevant products for that particular segment or the informal economy, as we say, banks can definitely include the micro MSMEs, the micro, small and mid-sized businesses with those relevant products, and by nurturing to them for the informal economy segment, they can definitely boost their growth as well as profits. Now, the question is that why aren't all the banks already doing this? Because this is a major opportunity, but obviously it has challenges like there is no clear credit history, right? There is geographical challenges, there's no valid identification, and the financial products are relatively expensive. So, because 75%, there are almost about 2 billion adults who are in informal economy, who work in the economy of cash, right? And now 75% of these are clustered in just about 25 countries, right? So if the banks want to really do it, they have to focus on a select amount of countries. Now similarly, the MSMEs in emerging markets, almost half of them, which you are talking about 200 million businesses, right, are clustered. They don't have access to banking services, and they are clustered primarily in 5 countries, which is Brazil, India, China, Thailand, and Cambodia. So financial inclusion will definitely, with the required banking facilities, it will improve the lives of families, communities, and companies around the world, and that way it will restore the trust of these people in banks, and at the same time serve a critical society need. Now, there are certain researches which indicate that financial inclusion can boost the economy of developing or emerging markets by almost about 14%. For example, markets like India. But on more frontier markets like, for example, Kenya, the GDP can be boosted by almost about 30%. And banking revenues can be increased by almost $200 billion, which is equivalent to 20% of the emerging market banks' revenue in about 60 countries.
And this is a great point, and I think this is extremely important. So, always to learn from the lessons, countries like India. And I'll put my financial crime hat for a little bit and go back into the UK in 2015. In order to promote financial inclusion, a lot of times regulators in the countries overall will give a very favorable conditions for the startups, for the fintechs, for the overall segment to grow with minimal oversight or lesser regulation. So, Nick, working with 42 years across regulator, customs, working with the banks, can you tell us your angle, like working with the banks? What are the role of banks and what are the role of fintechs that drive financial inclusion?
Yeah, look, thanks. Look, I think we just need to get back to some basics as to why all this sort of stuff is about. Understanding that money, finance, has a certain level of status for people, has a certain level of power. And, we see these examples every day of the week where people start getting more money, they start feeling more powerful, they feel more embedded in stuff. Now, the issue you get when you start having companies come along that say, all right, I'm a business and I need to run this business profitably, so I've got this sector of people that aren't going to make me any money no matter how hard I try, I'm going to just get rid of them. They're no longer clients, they're no longer customers. Well, where does that leave the customer then if that customer is looking aspirationally to improve their lot in life? Where does it leave them in relation to how they might do stuff? They're still going to do it. Money, finance is like water. It exists, it flows, and if it gets blocked anywhere, it just flows around it. And one of the things I think the banks have lost sight of is that another issue, and we talk about the cash, and I think there's still a significant amount of cash and always will be, as long as I'm alive anyway, is that the operation of moving of value around the world has been happening for more than 3,000 years. You don't think that a FATF-style operation that started in 1989 to try and deal with criminal drug dealers is going to stop a process like that. So we've got to start getting a bit fair dinkum about what we're looking for and what we're trying to cover off on. My experience in 38 years of policing is that money launderers don't deal with $10 loans. As a matter of fact, money launderers are now into the systems of company structures because they found that they've got that good at what they do, is that moving money through an individual or a person's name is just not efficient enough. So that, from my point of view, that means that all the work that regulators are asking people to do around KYC and the exclusion process, all these people that are on the dark side of the game, are a total waste of time when it comes to organised crime. And we've got to balance the game in relation to what we're doing. There's vested interest everywhere for this stuff. The regulators have vested interest. Quite obviously, they don't want all regulation to be regulated, otherwise they've got no job. The banks have got a vested interest to make sure they've got profits for their shareholders. But there's more and more people in that $1 and $2 a day income stream that would love to be getting $6 a day, $7 a day. And when they start getting $7 a day, the people at $2 a day become a threat to them because they consider themselves to be rich, and you start getting all these sort of other issues. So it's an evolving game. That's why I say the conversation that was had earlier in the first presentation, that's around credit, but we're going to have to find cheap ways for these guys to do their business. It's probably why the Bitcoin phenomenon has come so big, cryptocurrency, but we all know as well is that the longer you play with the game, the more infiltration with organised crime, the more mischief starts getting created.
Yeah, and I think between Anuraag and yourself, I think you've touched on the two major problems and opportunities at the same time. How do we ensure that we promote inclusion sustainably? And I think sustainability, that's a term we're going to be talking about for the next, hopefully, 40, 30 minutes. I think we all are for innovation. but innovation has to come with a proper mindset and focus on sustainability. So, Ismail, just going back to our discussion earlier today, who do you think are decision makers in the process? What are the challenges? What are the opportunities? And what are that process? You see how it evolves.
I think ultimately it's about transparency, and as an entrepreneur and as a business person, I always say we have to go back a few steps to go forward. Ideally, what I'd like to see is transparency between the banks and also the end user. Because if the end user doesn't have the transparency, and if we don't have a clear record of where this money's coming from and where the innovation's taking place, then it's very hard to keep track of. And I think that's the key, getting the technology and the innovation to the end user, not stagnating it, not creating stagnation, and creating a clear trail in terms of financials and technology. Especially living in Dubai and living in the UAE, we get to see a lot of startups, we work with a lot of entrepreneurs, and we get to work with a lot of FinTech companies. So I think it's that as also what's happening at the grassroots level, and how we incubate these startups and how we take them forward ultimately. But for me, the key is always the transparency.
Thank you so much for that. And then Ksenia, I just want to follow up, I guess, on our discussion. Having sustainability and ethics in technology from one end, but then really how do we ensure we include the most vulnerable and poor population into the financial inclusion? How do you think digital technology plays a role, and where we're heading in that direction?
Thank you, Irina. Well, right now there are 1.7 billion people around the world who are unbanked, and just 10 years ago it was 2.5 billion people unbanked, and I think that we've made this huge shift mostly due to the digital technology, because well, as the surveys show that unbanked people, if you ask them whether they would like to have a bank account, only 4% would say that they won't. The others just can't afford it. They don't earn enough, or they don't have like official credit rating. So digital technology makes finance, well, digital, which means less transactions, cheaper, more accessible, more affordable, more easily understandable for the people. It also creates like new possibilities. For instance, as I mentioned, unbanked people cannot get access to banks, but now thanks to the technologies, these people can actually be created digital, well, financial identities, yes, through processing lots of data, such as mobile operators' data, and get access to the financial products. So technology makes finance digital, which means cashless, and for most of developing countries, it means more safe, free from corruption, free from theft. But as we mentioned before, it adds, well, it creates more risk for those who want to do something bad.
Yes. Thank you so much.
Irina, I just want to take up this point, and that's a good point in relation to transparency, right? The exercise is why we have people exploited is that they get a certain level of frustration around what they're trying to achieve. And they'll start doing things, if they really want to do what they're trying to achieve, and someone won't let them, they'll start doing things that they normally wouldn't do to get around that process. Now, one of the big challenges we have in the financial space, of course, is that transparency has a opposing problem, and that's called privacy, all right? So that's an elephant in the room that still hasn't been fully worked out. How do we do about that? Maybe the technology stuff can help with that privacy, because quite obviously, if I'm engaged with you as a client, then we've got agreed that we can be private. And the information can flow between the two of us because we know each other. They're the sorts of problems I think we've got to sort out. And that will bring inclusion in. It'll bring people in that aren't frustrated, so therefore they won't be exploited. And all parties will start to understand. You know, I still believe that quite obviously the banks and the financial institutions under this whole FATF regime are pretty much doing their work with both hands tied behind their back and one leg tied to a post, because the regulators and the governments of the world aren't giving enough insight into how we're going to do things. The hay bale's got too big for everyone's concern. Somebody's got to come along and burn at least 50% of that hay bale. All right, just say, look, we understand that there could be risks in this, but we're all going to make a decision. There isn't stuff for us at the time being, and let's get on to something serious besides failure of compliance, which seems to have all we've done so far in the 30 years of work. I'd like someone just to start spending 20% of their time to look for the criminals that are actually doing this stuff than answering compliance.
Can I just add one point? So
I love the discussion.
so in today's world, we seem to have a narrative, regardless of what community we come from, whether it's Australia, the UK, Dubai, India. I think it's challenging that current narrative, which I call the status quo. Once we lock heads and we find a solution that is beyond today's narrative, that prospers the future and future generations, I think they're the conversations we need to be having, not the worry about when does the shareholder get the next dividend.
Absolutely. I mean, I completely agree with you. But then also, as a gentleman said, you know, in the prior session, companies here to make a business, right? And you value your shareholders, you value your customers, you value your communities. But then it has to work together. It has to be as a sustainable ecosystem. And Ksenia, thank you so much for your comment on the transparency as well as, I guess, safety. Safety is one of the important subjects we need to flesh out. And I think looking at India and looking a lot of African countries, you know, the shift from what you mentioned from 2.5 billion to 1.7, that's a huge percentage. And majority of that was possible due to the mobile widespread. So if person before had to carry cash, which was not as safe as mobile, well, unless they steal it, and then the whole life is kind of gone away. But then at the same time, people feel more, as you said, more safe and more able to do different financial products that they weren't before. So going back to Anuraag, so you've heard kind of different angles at what financial inclusion. What does financial inclusion meet digital mean for you?
So the fact that 80% of the transactions in the world are still happening on cash, right? because it's the economies where larger population sits, where you have the problem.
Unless we don't know what's the virtual currency volumes really are.
Yes. But the problem that dealing in a cash economy, basically what it does is that you're not allowed, or you basically don't have the ability to securely save and transact, right? And that's an economic independence which you are deprived of. Now, whether it's a person's savings account or a business account, whatever, in both the cases, economic growth cannot come in when you are restricted by only working on cash. Now, cash has a larger problem because it's you got to print, you got to store, right? So there's a lot of cost there, and there's logistical challenges which are there. But the larger problem is that in all this informal economy, it elevates crime as what was being spoken about recently. So all those challenges is where the digital finance part in the financial inclusion really helps and benefits, by encouraging people to move away from cash towards more of an digitally driven, electronically from prosperity, by empowering them and and by bringing in the required resources for their own living. Now, globally, the financial sector policymakers are clearly recognizing that digital financial inclusion is a game-changing initiative. Now, banks obviously can reach billions of new customers with all the statistics which we are talking about, they can reach billions of new customers if they adopt to digital financial services for the financially excluded and underserved populations. And obviously this then in turn things like microfinancing, for example, which started also from Bangladesh, right? Now microfinancing using digital mechanism also helps the poverty-ridden economy or the population, right, to get out of it and get access to cash and financial products and services.
Yeah, and I think this is very important point. How do we make sure, again, sustainably and ethically and transparently deliver technology to the local communities, to the rural communities, stepping away from specifically, relying on a mobile phone? What are the other challenges? What are the other potential innovations that are coming along? But before we speak to that, so Ismail, can you just kind of talk about what is your view? How can we sustainably bring technology to the local rural communities?
So I think it's very much a on-the-ground approach. So also understanding what solutions people actually need. I think there's a disconnect between some companies and also what the end user requires. So I think as a technology provider, as an entrepreneur, to understand where the challenges are, and maybe also to bring some people from the financial institutions to say these are the people who will be funding ultimately, to see it firsthand. So only 10 days ago, I started a 4-week journey in Ahmedabad, and then went through Istanbul and back to Dubai and then back to the UK and Spain and Germany. So I was able to tap in and out of different cultures and communities, and even in Europe, we're seeing daily challenges, where there's an enrichment of technology which is being stagnated. So if, as a modern race, we have access to these technologies, why is there the stagnation in filtering it to the communities? Because the communities that need it the most. And I think that disconnect is where we need to find the common ground again.
And I think I totally agree with you in relation to that process. So you'll find, like the stories around India had a situation where about 22% of the country didn't have a banking system. The government came in and sort of said, everybody can have a bank account, right? And they've opened it up to about now 80%, so we're working on statistical stuff. But as was just said earlier, is that most of the community didn't need the bank account. They've got one in their name, but there's nothing happening with it. Well, you've got to be careful what you put in place and how you measure it, because as a criminal organisation, I've got 28% of banks in banking accounts in India that I can now exploit because nobody's looking at them. So you've got to be careful in relation to what you wish for on how the process is, but it gets back to what are we trying to achieve here? Are we trying to nickel and dime all of the people that are trying to do their best to death? Or should we get over that point, as we were talking about, get past that dialogue, and let's start getting into serious and start maybe focusing on the assets that are sitting around? What do we know about that $40 million bank account that no one has accessed for the last 2.5 years? If I'm in a business, I'm damn sure I'm not going to have 40 million sitting there either. What's happening with that painting that's sitting in a customs free zone, or a warehouse that has no status? Who owns that process and how did that come about? And maybe we need to start getting into the more serious end and working backwards instead of trying to kill ourselves in the noise and work forward. Maybe that's the way to go.
Yeah. And I think you touched really too, right on the point. If we're looking at the neobanking area, right? So we're seeing challenges in neobanking. It's very big in Australia at the moment, and it's kind of like on the second wave throughout UK and now in Europe. But if you look at the book of a lot of these entities, they acquire customers pretty quickly, but then you're looking at where are the assets? Is there any activity? Is there a dormancy? How dormancy can be exploited? So all of those questions are quite important to understand. So it's not only how many customers do I have? What is your turnover? So this particular one, digital bank in Australia, they're $4 billion unicorn at the moment. They're moving to the Hong Kong. They have millions of customers subscribed. And their bottom line, because they're public, they have to report, is $16,000 or $14,000 for the whole year of 2019. $14,000, while their overhead is $860,000. So we can't be measuring the success of technology and success of innovation by how many customers and how quickly they acquire. Do you have a pretty robust process? Because this particular entity just have completely all of their accounts frozen in Hong Kong. If you set your technology without having proper robust risk framework at the same time, you're going to be facing legacy like any of the traditional banks per se facing right now. So we'll talk a little bit more about it tomorrow. We have FinTech mean banking, so looking forward to that discussion. But getting back to you, Ksenia, what is the sustainable adoption you are seeing, across the jurisdictions you operate in, and what are the challenges and opportunities to kind of give us a roundup review or overview?
Well, sustainable adoption has many aspects, depending on the country and on the situation. Like we just mentioned before about these neobanks, etc. For instance, there is a situation, in Kenya with this mobile money success, we see that, yes, there is almost total financial inclusion, but at the same time, right now, there are, I think, 2.7 million people who are blacklisted in the credit bureau because they cannot pay back $2. And this is also about how you achieve financial inclusion, but you really don't achieve anything. Also, another example, for instance, in South Africa, 70% of people who own bank account, they just go and withdraw all of the money as soon as they get it on the card. And this is also maybe about the education and about offering better and more relevant products. Yeah. Yes. Talking about how to adopt financial inclusion sustainably, I think we should look at such target groups as women and maybe children, because women are mostly about sustainability. When they handle financial products, they think about their households, about their children's education, and here maybe we need some help from the governments, from the NGOs, and from the big companies to help with social initiatives. I've seen a very good example in I think it was in Nigeria, when a local bank, with the help of Visa and a couple of NGOs, they offered such kind of a very simple saving product for women, where they could easily set up a bank account, just uploading their photo and some basic phone information, and the women would receive some reward points while achieving their saving goals. And in 6 months, they got around 40,000 new saving accounts. Every account was around $40, but still, like they attracted this women. Or in Indonesia, I think 1/3 of the population is unbanked, and or vice versa, 2/3 unbanked. And they had these initiatives offering saving accounts for children, and this was targeting like the point to create a habit to save and to invest and to deal with financial products. So yes, this is about sustainability.
Hey, can I also make a point? I think that one of the things that we've got is that this one size fits all, and it's not just banks, it's government, everybody else. And one size fits all is convenient. It's easier because mostly people don't want to do any more work than they have to. But one size fits all, as we know now, just doesn't work. So I've done a lot of work with FATF and the APG, the Asia Pacific Group, which is a PADO style one for this region, a bit like MENA FATF is. And I'll give you an example of what one size fits all. So the Americans, the UK, Australia have the same rules that have to apply for islands like the Cook Islands and Samoa. When we were doing some assessments of Samoa as a member of the APG, the one guy in their government over there had 22 hats that he had to wear to answer the FATF work. Now, there wasn't enough hours in the day for that poor bloke to do 10 hats, let alone 22. Probably 15 of the hats he had no clue what he was even talking about, and yet he had to report back to these regimes that are demanding this stuff. And I think we need, as you were talking about, let's get back to basics. Let's get down to different levels and say, what is it that we're trying to achieve here, firstly? All right? It's not compliance. It's about trying to get the criminals to stop moving illegal money and try and stop people from being exploited over financial stuff, right? And let's start working out what it is they need. You know, that's got to be a good news story. When you've got women that have got a capability of being able to do their work and put a bit of money aside, it permeates through the whole of the community, right? The women are going to stop that infiltration because they're the strong ones in relation to that sort of stuff. But that's an initiative that needs to be looked at across the whole game, okay? So they're the sorts of things I think we've got to get serious about.
Yeah, and just wanted to point out, you know, a very good point that Ksenia brought, education, right? And I think especially when we're talking about local communities, that's the very critical point that's missing right now. A lot of times, and I hope to believe that most of the people trying to do good, and financial inclusion should be a very positive thing. But sometimes without proper education and proper understanding your risks, your exposures, it's really hard to make that adoption sustainably. You know, when we're looking at open banking, right? Open banking is promoted by a lot of countries right now. Australia is one of them. You know, Europe is all on it. And speaking to one of the largest banks in Australia, they are trying to do the POCs and data lineages and, you know, connectivity with all the third parties that will be plugged in. So now you need to look at not at individual product or service that you offer, and not your customers and products and channels in a traditional way. Now you have to understand end-to-end supply chain. Who are your, or where are your points of exposure? You know, who is that third party you're going to be dealing with? And again, talking about tomorrow, we'll talk about how's this very much similar to the correspondent banking risk, because you are arm length from that ultimate a customer, or maybe twice as arm length if there is multiple intermediaries or third parties in the ecosystem. So how can one make that educated assumption and to ensure that they can rely on the whole supply chain to ensure that the system is doing what it's supposed to do? So the technology, Nick, you just really quickly touch base on that. You know, talking about opportunities and talking about risks, is technology really a solution? Is that an answer to financial inclusion?
Ask him.
Oh, yeah, Nick.
To me.
Yeah?
Look, the technology is going to allow transparency, okay? The technology is going to be able to give you an opportunity to be able to understand something as close to the point of the action as it possibly can, okay? So what it does then, it allows you to do a better assessment of your risk. So if you've got a situation where, at the moment, one of the biggest problems the world has got to in relation to this whole game is that half of the information that you actually need to make a proper risk assessment on criminal inclusion, all the rest of that stuff, is sitting in unstructured data. It's sitting on paper and paper documents, and, you know, even the Hawala guy's journal is all written down. Now, if it's written on a piece of paper, it's not accessible to anybody else unless you hand it around. Where the technology can be then provided, where, you know, one of the things that's spoken about at the moment is around the blockchain game and how that might work. But as we move into trade as a mechanism to move value for criminals, right, we need that trade information to be given to the bankers as quick as the banking information gets given to the customs and the trade people. Now, that can only be done by technology, right? But the issue that you get with that game is you've got to be careful what you wish for, because what's happening with a lot of banks now is that they're getting so much information that the people that are actually asked to identify the risk are doing a lot of looking, but they're seeing squat. They don't know what they're even looking at. They don't understand what's going on in relation to what it's about. The criminals, as I keep telling everybody, FATF's done an excellent job teaching organised crime how to deal with their money. Doesn't help many other people. But the criminals getting exceptionally good at making sure there are no exceptions to the rule. So we've got to use non-financial information, non-risk processes to start helping the banks understand the financial mischief that might be going on.
And prevent de-risking or debanking, ultimately. Ksenia, you wanted to add a little bit to that?
I think your initial question was whether technology can help with the financial inclusion, can quicken it. I just wanted to go one step back, that why do we need financial inclusion for, right? It's not the goal itself, it's actually about the reducing poverty on the first place. And as the Kenyan example I mentioned before, yes, technology of course can quicken financial inclusion, but I'm not sure that it's very good to quicken it, because yes, people are now inclusive, but what's next? Now we're starting to think whether they are well informed, whether they can deal with these financial products, whether they are protected. So these are the questions that are now raising.
Thank you so much. And Ismail, just kind of summarizing all these points and seeing vulnerabilities of the end-to-end process, how can we overcome those challenges that Nick just mentioned and Ksenia just mentioned and ensure that ethical technology adoption?
So I think when a technology is implemented, or technologies, there needs to be, again, a trail of where is it, where is that technology originating from? Who is the end user? Who's implementing it? Who's funding it? We, just by giving a loan to a community or village or a country or something, doesn't mean that that technology or that those funds are going to be implemented in the relevant way. So I think it comes down to accountability. Accountability in where it originates from and who the end user is, and creating that trail. Transparency and accountability.
And so now we're kind of coming into the summary of what we all discussed. So what is the financial inclusion looks like in 2020 and beyond? And I'll start with Nick, and I want to kind of put a parallel what Nick thinks, and then if you can take forward after that.
Look, I take the point that you asked the question whether everyone should have financial inclusion. All right, and the argument is it worth the effort? Well, I've seen people that have been exploited because they haven't got the power to be able to say no to people. And it's around the fact that most of the time they don't have the money or the issues around. So my view of the world is I would like everybody to have an understanding of that process, even at its rudimental. Just to say, I don't have to borrow my money or get my life savings or do my work for this guy, I can do it for this guy. Right, and understand that process. So from my point of view, that's fundamental. It might be in my comments a bit aspirational, because I think that we've got a lot of people out there that don't understand that we're even trying to do the best for them. And so you've got to deal with that sort of psyche of that group, and you've got vested interests out there, especially the criminal vested interests that certainly don't want us including everybody. So you're fighting a pretty tough battle.
Do you have anything to add?
So, as far as I see, financial inclusion has a larger impact on eradicating poverty, right? And the impact it has on the poor or the weaker or the rural section. For example, even if you look at a case of a woman staying in a refugee camp and who has to receive aid on regular basis, and that aid, if it is given in cash and she has to walk half a mile to go and get that cash, and imagine her plight when she's walking back with that cash. Now, if that whole process can be where technology plays a role, it can be digitalized, and she can transact in a grocery store in the same manner like anybody else. It's also about human dignity to a certain extent, right? So also these, and then again you may have one of the bigger facilitators of financial inclusion also has an impact on agriculture or farming. Right? If you look at the farmers, and if farmers have access to financial inclusion, and if they can digitally plan their crops, their distribution of it, even business finance, right? It's a boon. It's a boon, and agriculture is the backbone of many economies of many countries, right? So also in rural areas where you have to have physical banks and their branches, you know, for people, if they don't have access to digital, that means that you have the problem of transportation, very long travel, long queues, and that also deprives them. And plus for the banks, it's a huge cost because the number of branches they have to open, the number of people they have to deploy there. So this whole the security and everything, right? So with financial inclusion, it can not only boost the profitability of the banks, but also bring a lot of empowerment and dignity amongst the community.
Yeah. So this is an excellent point, and I think kind of the key points I've taken out. You know, financial inclusion is important. It promotes dignity. It promotes, helps people, especially in the local communities. Training and awareness is extremely important, and we need to make sure we're working with the communities to adopt technology sustainably. It helps not only the families, it helps communities, it helps governments, it can bring the GDP up and promote healthy, sustainable innovation. But then we also need to ensure that we apply that risk mindset. So thank you so much, panel, for this wonderful discussion. We will open up to questions, if you have any. Do you need the microphone?
I think Deborah wants to ask a question.
And yeah, there's a round table to ask. Do you need the microphone? Yeah, that's what I was trying to give you. That's right there. There's a question right there. Okay. Continue, we can hear you. Oh, yes, okay.
Question about data privacy. There was a paper submitted to the United Nations about a lot of people using technology and putting it the guise of financial inclusion, but they're impinging upon data privacy rights. Any views from the panel on that issue?
I mean, off the cuff, you know my thoughts. I think people need to have a greater involvement in what happens with their data and their privacy. And you shared something recently which was critical. So I think, again, people are slightly misinformed. It becomes a bit of a narrative. You go on a website or you interact or you engage with something, and then all of a sudden you just accept the ecosystem of that environment you're in. We've grown accustomed to just accepting things. We can,
But I'm curious, from the panel, when it comes to data ownership, in your view, like if we could just hear from each of you, who owns the data in principle? The company or the consumer?
So it's always the consumer who owns the data, and I think if you actually look at different regulatory frameworks, GDPR coming out, open banking and the framework around banking, it's easier to share the data, but the cornerstone of the regulation is that consumer owns the rights. So we all have an opportunity to opt out. Unfortunately, not everyone understands their rights, and that's why, as to Ismail's point, there's a misconception that as soon as you go in to use the banking services, your data is owned by everyone. As long as you properly set your rights to data, bank can or cannot share that. So that's a critical point. We need to ensure that it's very clear and for the end consumer.
So I've read a bunch of privacy policies and terms and conditions. I conducted a study for a year, and in practice, that's actually not true. So there is a clause on most privacy policies towards the end, which of course people don't read, that when you give a platform your data, if that company is, so let's just say you trust the company, right? Because they're delivering a particular service. But then if that company is sold, that data is part of the acquisition. And therefore, within that clause, it shows that the data, in fact, is owned by the company. This is a problem. And we cannot keep pulling the wool over people's eyes. This needs to be tackled. Otherwise, we're smoking dope. We're going to create a terrible future for future generations.
And you are right, Deborah, in what you just mentioned, because even in the region where we sit, where we talk about being the very smartest of the government and artificial intelligence superpowers by 2030. Even here, when it comes to data privacy, it's extremely in its very nascent stage. Yesterday, I was with a major governmental organization talking to key stakeholders, and when we talked about GDPR, they said we have checked with all legal, the framework that have got nothing to do with GDPR. We don't have to be GDPR compliant, even though you have European citizens working in your organization, or you have credit card data or other stored of European citizens. But simply they say that we work with local organizations. If any external organization or a European organization has to work with us, they have to sign up an agreement with a local entity, and then that entity supplies to us, so they are not covered in GDPR. So the education is extremely poor. However, now Bahrain has started off with a Data Privacy Act. The NISA here has also now changed to something called SIA. So there is a lot of work which is happening, but it needs definitely a lot of education and work within the region itself.
And look, I think the issue with data is that I'm not sure that so many people need as much as they think they need to make the decisions that they make around risk. I don't need to know a hell of a lot about my friend here if my other friend here that I do know very well says he's a good guy. All right? So my risk level is going to change with that call. The issue is, of course, is that agencies and organisations that collect data and on forward it don't want to be put in a position to determine what should go and what shouldn't go. They just simply go, over to you, Red Rover, and you take the lot. So until we can start coming up with some solutions, and maybe the blockchain type ideas around, encrypted data that's tokenized, so the token's the only thing that flies around, and you don't understand the underlying information, you just know that there is information sitting over this spot here. And then use traditional methods to get that information if you feel that it's necessary. So there's some real, we get back to dialogue again and conversations around this stuff. It needs to be sorted out.
And just wanted to add one point to that. I know that there's the regulatory framework, and there's really what happens in reality. But just one, caveat and tweak, I want to put it back right at you. Most of people here has at minimum one social account. It's either Facebook, it's Instagram, it's you name them. How much information we give to those sources completely publicly, it's a different side of a coin. Your microphone is breaking up. Look, I completely see your point. We're not going to make it about the data privacy during this conversation. Happy to take it offline and discuss with you during the break. I think there's definitely a challenge, and I think we all agree in here. There's a framework, and there's the controls that consumer may put on controlling how much data is shared. We live in a time of data. We're talking about public data, publicly provided data, social data, financial data, and so forth. So there will be definitely consequences and challenges how you manage it. And this is a true challenge. I completely agree with you. It's just we need to make sure that the consumer ultimately understands their rights to data, and then where possible, they can be opting out to provide certain information data points. There was a question right here, and then I'll get back to you. Ram, do you want to ask a question?
in between this unbanked area and the urban economy. I think it all presents a very good idea. I think, sir, for you, I have this question. The Indian government has ordered for all the financial institutions to go to the rural India with their infrastructure. In 2015, at least 30% of them have to go. What do you think, in your opinion, stopping these from going there?
So I don't see any reason, apart from bureaucracy, which would in any case stop from this happening. And the fact that technology will play a major role, because you have larger Indian players like the Geo and making empowerment of in the rural area of people having smartphones, mobile phones. So the fact that you are talking about, even in terms of their outreach, they have the product, they got to distribute it, and that can become increasingly available to them through digital distribution, right? Their reach to the customers outside, all across the world, becomes much easier when done electronically or digitally on a B2B digital platform. Now, all that, when financial institutions also have to become enablers of not only providing the finance, but also providing the end-to-end solution, or having the network of other facilitators which will help them bring the product into the market and onto the export area. So I don't see there any limitation now with technology being abundantly available and will play its role. It's all about education and enablement of these people, which is important.
Do you have anything to add, Ksenia? You look
No,
like
no. I actually wanted to add about the previous question regarding the data, if you don't mind, or we should continue.
Let's just continue. I'm just afraid to digress into the data. Any more questions? Oh, yes. Mm-hmm.
My name is Farhad Karamia. I am a management consultant with a company called Farmers Global. I find the topic very interesting. Financial inclusion is definitely the way forward. I would actually be very keen to find out what strategies and what ideas, what initiatives have the panel experienced or heard about, where you've actually extended and gone to the people, the unbanked. Because there are a lot of strategies that people come to create within their organization on the board tables. However, it's important to understand what they actually need. And I think that's what the earlier gentleman also pointed out. What kind of vocational skills do they need to have? Mr. Ismail, that's your name. I loved what you said about actually understanding, because that's what the future needs. So while there is a short-term requirement, as you highlighted, for sustainability, we need to understand. I would actually be very interested to find out any success stories, anything that you've done. We've actually spent time with the unbanked, understand exactly where they stand and what they need. Thank you.
So I think going back to, is this Mr. Rajesh? Mr. Ram. So I think the disconnect there is these talents on the ground, these people who are producing things at the grassroots level, whether it be cotton and XYZ, there's a disconnect between who represents them. So where the tier system starts to come in, there needs to be almost, he used the right word again, a cooperative, who has the interest of these people, these communities and these villages at heart. And like Dr. Anuraag said, unfortunately bureaucracy makes its way in. So if you don't understand this process, it's a bit of a double-edged sword. So it's tackling these issues, the bureaucracy, and also how to represent people as a cooperative, especially in a big place like India. And we can use that format to extend that to other territories as well. And going back to the second question, so for instance, somewhere like India, again, we're part of a not-for-profit hospital in Ahmedabad in Kedah. And that's been something that's been going on for 10 years. So in terms of financial inclusion, that's literally individual wealth or individual people who have helped sustain this hospital in India. Now there's around 3,000 beds there. So it's a big thing, and it's a complete not-for-profit. So that's kind of a grassroots experience, hands-on. And yes, I have been adopted by the Indian community.
It's truly great to see, when the innovation works for the good cause, right? And really helping and solving a community problem.